but he saw something in me that said, hey, you've got all of this corporate America experience advising and coaching and delivering solutions into corporate America. I think you'd be really interested, or you could be really interested in helping us grow and expand our national build-to-suit business. And I said, listen, I'm actually taking a new job with Ernst & Young to run their global managed services business. I don't know if real estate's for me. He said, well, just come and meet with me.
Welcome to our Industrial Advisors podcast. You have Bill Condon, we have Kyle Box pinch hitting for Matt McGregor today. And our guest today is Mark Paschal, who is Senior Vice President, National Build-to-Suits for SunCap Property Group. Mark's based in Charlotte, and appreciate you joining us. Maybe we start with just a quick introduction of your kind of background, how you got to the position that you're in, and what you guys do specifically.
Sure. Well, Bill and Kyle, thanks for having me. Pleasure to be on this. I've heard about the podcast. I even started to listen to it some on the way up here.
Fantastic.
So you guys crank out some really quality stuff. And I think what you're doing is really cutting edge for what the commercial real estate industry as a whole kind of needs, right? It's a tool to help educate the younger generation. It's a tool to tie people to what you guys are doing. So I commend you on what you're doing with the podcast.
Appreciate that. Thanks for joining us.
Yeah, no, it's a pleasure to be here. So the way I frame my career is I've spent my entire career building and scaling and advising businesses. Initially, I started right out of school working for a media company. We were selling everything from online media solutions to corporate America to radio advertising spot. I actually worked on the radio for a little bit.
Did you?
During that time.
You forgot the part where you were a football player at UNC. So what position did you play?
I played linebacker at UNC.
Linebacker, inside or outside?
I played middle linebacker.
Middle linebacker.
Yep.
Yeah. What number were you?
35 pounds ago.
What number were you?
41.
41,
Yeah.
okay.
So-
I always
so
think of like a middle linebacker, like 44, 55,
Sure.
Yeah.
Just a really aggressive number.
Yeah,
That's right.
yeah, 41, there you go.
And I was actually making a joke earlier. I got my first introduction into commercial real estate right out of school. I had accepted a job offer. I was up in New York and got a call like the day, it was Sunday, I was supposed to start Monday, and got a call, hey, don't worry about coming into the office today. You've lost your job before you started. So that was a rude awakening into the
What time, what year was that?
2008, 2009.
Okay, so it was during the Lehman Brothers,
it was like during crisis mode.
Everything, yeah.
Crisis mode. And so that was a rude awakening.
Did you already move there? Were you already living there?
No, I just was up there getting ready.
Okay,
and got the call basically saying, hey, like, don't worry about starting at work. Try to find something else. So that's how I got into the media business, and that was my first sort of foray into advising corporate America.
Yeah.
It was a crash course. I did that for a small period of time and got the opportunity to go join a group founded by Terry Pagula, who now owns the Buffalo Bills, on the sports agency side of the business, which I was passionate about. I'd seen guys throughout my playing career make poor decisions as it relates to their business, their business alignments, if you will. So I thought there could be a way for us to differentiate how we support guys that have immense talent and how we could support them on the field and off the field. We grew that business from basically 0 to 17 clients, reverse merged with a group down in Atlanta, grew that business. Terry had the opportunity to buy the Bills. And at that point, we were going to be acquired by CAA, which is the largest talent representation firm in the world. And during that period of my life, I enjoyed it, but I knew there was something else out there, and actually had the unique opportunity to join an up-and-coming sort of hyper-growth company called Axiom. It's an alternative legal services provider, also with management consulting arms of their business, doing everything from like large-scale M&A and integration work to outsourcing work to alternative legal services. This is embedding attorneys to go solve different corporate America problems. Worked within the real estate group, worked within procurement, worked within sales. So I got a crash course for 7 or 8 years in understanding how corporate America works and the challenges that corporate America is often placing on their relationship partners. And so I viewed myself, and I was a relationship partner to some of the biggest companies in the world, and it gave me a tremendous amount of exposure and experience into what differentiated us and what allowed us to go win work versus when we didn't, or when the other providers were chosen. And I've had a relationship with the founding partner of our company. That story's phenomenal. I'll share that with the group too. But he saw something in me that said, hey, you've got all of this corporate America experience advising and coaching and delivering solutions into corporate America. I think you'd be really interested, or you could be really interested in helping us grow and expand our national build-to-suit business. And I said, listen, I'm actually taking a new job with Ernst & Young to run their global managed services business. I don't know if real estate's for me. he said, well, just come and meet with me. So I sat down with him and I was like, all right, this sounds great. And then COVID happened, right?
Yeah.
And so the old story is, we had two of our businesses were spinning. We were taking a business public at my old company. I was going to go either work with one of those spin-cos running part of that business or go work for EY. And to Flint's credit, he was like, you could do something special within the real estate business, and we'd love to entertain that. And my wife, to her credit, also agreed with Flint.
That's the decision that was made. Yeah,
that's right. Somebody that you trust, that's older, that's seasoned, that's grown and built a business, and my spouse, right? Both saw something that I didn't necessarily see. And so there's a little bit of a leap of faith, but it was also tied into what SunCap had really been able to build and do for clients in a really short period of time. Flint and our team developed a relationship with FedEx Ground that took a couple of years to develop. 2008, 2009, they started SunCap Property Group. And I've told this story a lot to folks. They were challenged by FedEx Ground, hey, if you want to work with us, help us get into New York City. And Flint was on 50 flights that year to go help them figure out how to do a project in New York City. Fast forward.
Like in Manhattan, New York City? Like
in the 5 boroughs, yeah.
Yeah, okay.
And you want to talk about like impossible to do, right? They couldn't get in it, couldn't get in New York, couldn't find the right solution there. And so to the team's credit, that helped launch the relationship that we have with those guys. And sort of through that, they were hyper-focused on rolling out their expansion plan, 2011, 12, 13. And since then, we've done north of 100 projects for those guys.
Yeah. Are they your biggest client?
They are our biggest client by volume.
Still. So that relationship started in 08, 09. 2025, that's still going strong.
That's still going strong. And that's just a testament to the work that we do for them.
Sure.
Right? I think what we've positioned ourselves at really in the market for all corporate clients, but specifically for FedEx, is give us your hardest, most challenging requirement, because we've got the technical expertise. We've got a team structure that allows us to go solve, whether it's real estate development challenges, entitlement permits, wetlands. We've got the right team to drive our consultants to get to the right answer.
Yeah.
We've got a really sharp capital team that all sits up in Pittsburgh that's laser focused on driving the sharpest and best capital solutions. And we hire, former general contractors to come in and run our projects and bid out projects to the best general contractors that make sense for a specific project. So when you pair all three of those groups together, we are able to deliver outsized and differentiated, experiences and results for clients. And so we've taken that sort of approach with our big client, and I was hired, again, 6 years ago, plus or minus, and there's a lot of work that was done between 2015 and 2020 to diversify our business, grow our client base, grow our broker relationship network. And so I've just been, I think, a beneficiary of a lot of work and the groundwork that's been laid to date. And we picked up other large groups that you could probably imagine we do work with. And so I stepped into a role that said, hey, help us go and expand our client base, expand our reach, expand our relationships. And for us, we're not a volume-based business. A lot of developers are trying to do as much work as they can.
Right.
And we're heavily oriented to relationship business on the development side. We're after how do we solve our clients' needs. Whatever it is to the client, we say this all the time, let's keep the main thing the main thing. If the client's happy, if we're delivering an exceptional experience, if we're solving really hard problems, if we're over-communicating, if we're hyper-responsive, the clients will feel that and see that. And so I've really appreciated the opportunity to work with a bunch of net new clients over the last 6 years that we've tailored our approach to allow them to go find success within the real estate group.
That's awesome.
Yeah, that's great. So you touched on what drew you to SunCap initially, and obviously, the build-to-suit environment in business and just development in general is hyper competitive. You have to have a competitive advantage to go win new business, right? And you touched on what SunCap's differentiator is. But in today's market, how are you guys evaluating either build-to-suit requirements on the individual level or evaluating new clients to take on, on a portfolio-wide scale? Like you said, you guys are relationship-focused. How are you evaluating both of those things?
Yeah, it's a great question. I would say that our true clients, right, are twofold. We have our broker clients, which are in the tent and in the weeds with our end user clients. Servicing those broker clients with the same urgency and the same rigor that we do with our end user clients, I think really differentiates us, at least early on. We'll get requests all the time, hey, help us understand this site, right? This is a site that we're looking at. Can you guys just kind of peel through it and give it a developer's perspective? Is it developable? Is that railroad an issue? Is that offsite going to be a potential issue? And so we'll lead them down a path to say, from our perspective, here's the nuances and challenges of the site. Here's how we think you can overcome them. Here's what we'd recommend you guys do moving forward if you're keyed in on the site. So it's servicing our broker clients in a lot of different ways. It's just one example. We'll get capital questions from broker clients. We'll get all different kind of questions. What does it cost to build this in Santa Fe? And so we've developed in 250 markets.
Yeah, have you done deals basically everywhere across the U.S.?
Yeah, that's another great point. Is our reach is really unique because we've been in 250 markets all over the country. And so our relationship network, our experience in those markets allows us to get to the right answer really fast and with conviction. And I think that allows us to continue to build trust with our clients, our broker clients and our end user clients, that what we're telling you is what we know to be true. And so I think that's part of it. I also believe that as the markets have shifted over the last 2 or 3 years, there's more and more developer controlled sites that people haven't put into production. We're always going to have to compete with groups that control 100 acres in Atlanta. A lot of our clients come to us and say, help us solve this. Go help us find a site. Go help us solve this. Here's you got stiff competition. But what our clients have found is that not everybody's willing to play ball on their site, their building, their plans, their capital. And it allows us to come in with a fresh look to say, well, this is how we could potentially solve this for you guys. And I do think that sort of helps us differentiate us with our clients as well. The other part of this is capital markets has been crazy. It's hard to price things. I think the real cool thing about SunCap, what also drew me to SunCap, is our founding partners' conviction around long-term leases with credit tenants, regardless of location. We'll go wherever our clients need us to go. We'll build them whatever they need to build because we're in the business for them. We're just sort of a byproduct of that.
Right.
That's a great advantage to have, though.
Because not everyone will go. Well, not all build-to-suit companies will go to whatever market.
Well, I've done a project in Kennewick, Washington. Do you know where that is?
I sure do. Tri-Cities. Yeah, absolutely. What'd you do there? You remember?
Yes, I did 110,000 square foot build-to-suit for
like a fruit company or something?
Food company.
Food company.
Yeah.
Got it. Yeah.
And so it allows us to be incredibly nimble, incredibly flexible, incredibly sharp, and we can make those decisions. We're empowered to go make those decisions. We talk a lot about ownership within SunCap. We want to make sure that everybody on the team feels an ownership for the project success, and they're empowered to go make decisions that can advance projects. When clients pick us, it's because surety, reputation, and speed, because we can make decisions quickly to the benefit of our clients. Our clients, on the other hand, don't always make decisions very fast.
We'll experience that.
But
we wouldn't know anything about that.
But at the end of the day, like for us, it's about making sure that we're ingrained with the right groups of folks that understand the value that we can add. There's a true partnership, respect there, and a true trust that's built over a lot of what I call spec work. We're speccing our time. We're going to pour into those brokers and we're going to pour into those clients because we care, right? Because we want to see our brokers and our clients find success. And if a deal comes, great. If it doesn't, that's fine too, because we're just after the long-term relationship for them to make us their first call. And a lot of groups just aren't built that way from a time and resource standpoint. We're fortunate to be built that way.
Sure, no, that's great. I mean, in our industry, the relationship part of it trumps everything else. So we talked a little bit about location. Are you seeing any trends from end users that you're working with on certain locations that they're focused on, or anything that they're looking for from a location standpoint?
Yeah, it's a great question. And I'm sure you all have seen it, but we're definitely seeing it in the markets that we're active. So SunCap, to sort of back up for a second, SunCap's core business and the way we started our business is a build-to-suit business. We're going to solve client needs all over the country. As we've diversified our business, we've added a speculative business on the east and a speculative business on the west. We're active in those markets. We've added recently, in the last year, an acquisitions business. And so this unique, I think, structure allows us to stay hyper-focused on the projects that we need to stay focused on while also staying collaborative within the groups. And so I've got unique perspective on some of that as it relates to where clients want to go or what's driving that. I think it comes as no surprise, manufacturing's coming back in a big way. And that looks and feels a lot of different ways when you look at like industry verticals that are busy.
Yeah.
It's groups that like we would have not have thought to be busy 3 or 4 years ago.
Right.
Obviously, data center work it's got every headline. And that continues when you combine data center, cold storage, manufacturing, all of those require a ton of power.
Yeah.
Yep.
And so power continues to be one of the first hurdles, especially when we're working with the clients and they're like, hey, what do you think? about this market. And it's like, well, these 4 sites could be great sites. How much power do you need?
Right.
And here's the long lead items that are going to take to get you guys operational by 2027. And so power's leading the conversation more and more, which power was always a part of it. But now that we've got such heavy power users, it continues to drive the conversation. Labor obviously continues to be a big part of that, more for manufacturing than for the other 2 asset classes, and distribution as well. But when you've got reshoring, onshoring, nearshoring, more investment in the United States. I had this conversation with somebody the other day. I'm as bullish on North America and our economy and the investment that's taking place, especially in our business, than I think I've ever been, even during the boom of COVID. We've got a little bit of rate relief hopefully coming. I mean, the 10-year is now under 4. So there feels to be some momentum building, but it continues to be sort of tamped down, at least in some regard, by power and labor.
Power and labor. That's the name of the game.
But again, the Smile States, right? The Southeast continues to be super busy. A lot of requirements in that market. Uniquely, sort of the Midwest.
Midwest has been great.
Has been busy. We've got a lot of requirements in the Northeast with one client right now. So it's really, I would say, a North America story. The investment, the energy. I'm as excited as I've ever been to be in industrial real estate.
That's awesome. Us too. So glad that you have that same outlook.
So with the challenges with power then, and then combined with the momentum that you feel, I think we all feel in the North America market, how do you see the build-to-suit model and business evolving in the next 5 to 10 years?
It's another great question. I'm a big believer in technology-enabled solutions. It's sort of how I grew up in business, is providing differentiated services to our clients that were tech-enabled, whether it was through machine learning or the early beginnings of artificial intelligence. And this is like 7-8 years ago, before this was mainstream. How do you get to the right decision faster? And I think that in our business and in the build-to-suit business, technology is going to continue to enable us as developers and you all as brokers to solution set faster, problem solve faster, get to the right answer faster. So, and for your clients, right? They can do a lot of this work too now up front. And so it's been interesting to see how technology, and real estate's a slow adopter of technology. We've kind of always been that way. But I do believe that we're on the very early stages of a revolution within our real estate development group of tech enabling our solutioning for corporate America and for speculative development. If you can get the right data, and if you can get to the right answer, if you can find the right sites with speed, and you can site plan them faster with less leakage or less risk, there's tremendous benefit to how you can get to the right answer faster for clients. So I think technology is going to be a big part of what we see over the next 5 to 10 years. I think with the Big Beautiful Bill, one thing we've heard from clients, which I found to be interesting, is accelerated depreciation obviously is back. There's a portion of that bill that allows you to depreciate manufacturing-focused components within the box. So there will be, I think, more and more clients that are wanting to own some of their assets.
Especially if it's a specialized facility.
That's right.
Yeah, they have a bunch of infrastructure in it.
That's right.
Yeah.
So I think that is another part of, and I'll call that just capital solutioning just generally. I think that we'll continue to go through a reorganization of how folks are thinking about real estate as an investment, right? There was this real risk off period in time. I do believe that corporate America now wants to potentially invest in their real estate, and that can take many different shapes and sizes. But that's one of them. It's like, as you mentioned before, it's a hyper-competitive business. I also think that with the lack of spec product that's been pushed forward over the last 2 or 3 years, it takes a couple of years to get that restarted. I do think there's going to be a unique window here for the build-to-suit business.
I agree.
To go and solve client needs. And one of the other things,
and get land sites that maybe developers are just
get
out of.
That are ready to get out of.
Yes, exactly.
Right. That's right. And we're seeing that.
Of course, yeah.
Where you get tasked, hey, can you guys go solve this? And it's like, hey, this is controlled by the developer. The client says, go see if they'll let go of it. And more often than not, right now they're saying, yeah, we'll trade out of it. So that's an interesting development.
So all this stuff has been really beneficial, and appreciate you sharing your knowledge. Last question. You played football at UNC.
Yep.
Okay. Maybe the best uniforms in college football.
I would agree.
No doubt.
I think,
agree.
but
No
I
doubt.
will say Ole Miss is making a run to in that discussion.
They're taking the baby blue a little bit.
They are.
That's UNC's color. Yeah.
So how long's you're a former player there. How long's Belichick going to last as the head coach there?
That's a great question. 36 months plus or minus.
Yeah.
That's sort of the over-under, right? I had this conversation with a friend earlier. You can do nothing in 7 weeks,
Yeah,
right?
right.
From a program, whether that's business, whether that's football, 7 weeks is not a fair barometer of
Sure.
the program and the culture you're trying to build. I would say that there's obviously been distractions, and there's been more noise just around UNC football generally when you hire the best coach that's ever done
Yes.
it. So I think we've got to be patient as an alumni base, as folks that support the program, to say we made a big investment, we've got a great leader, we've got a great guy that knows how to win, give him the opportunity to go and build
Yeah.
the right program. And I'll give Lombardi credit too. It takes time to build a program. It takes time to build success. And I hope we're well north of 36 months, but I would say like the 36-month mark, that'll be sort of a check-in for a lot of folks. To say,
everybody.
Are we on
Yeah.
the right,
Everybody.
Are we
Yeah.
on the right trajectory or are we not?
Yeah.
So,
Well, we appreciate you spending time with us. Very insightful, and wishing you guys good rest of the year and heading into 26 with momentum. I like your outlook and positivity on where the industrial market is going. We see it the same way.
yeah, that's
Absolutely.
great. Thanks so
Yeah.
much, guys.
Yeah, thank you.
Appreciate it. Yeah.